I did an interview with Marcus from Rockwell Trading because I did a review on his PowerX Optimizer software, and you can see that review on my channel. And there's a few things that he wanted to address, and I'm totally open to anything that he wanted to talk about. I'm totally open to any questions he has, and maybe he has some accusations, maybe he is not happy with some things. I don't know. We're going to find out here, or you're going to see here in the interview. And I'm happy to answer any questions of anyone that I do a review on. And so here is the interview, which happened on March 25th, 2021.
Tell me about you. Tell us about you. I don't know.
Well, basically, let me go back about 15 years. I have my business degree. I'm a regional manager at a water treatment company. I own some real estate. I owned a laundromat at that time. I have my broker's license as far as real estate broker in the state of California. And I have a little bit of money saved, and I'm doing some online trading, in which I had been for a while, but it's not really very successful. I really wasn't satisfied because since I was 19 years old, my goal was always to find the most efficient way to make money. So, I was always looking at franchise opportunities, other opportunities, businesses, but everything always had that drawback of an employee and taking up a lot of my time. So I knew online trading was a great model, if I could just solve that problem. And 2008 was the last time I blew up my account. I blew up my account 6 times. So I have a ton of experience as far as trading online and blowing up accounts. But, I kept learning, and one of the things was I was real hard-headed, and I didn't want to listen to anybody else. And so it wasn't until around 2011 when I said, you know what, let me learn from other people. And so I started looking at online, what was available online. And I realized, maybe I could learn from other traders. So I started taking courses and reading books and things like that. In 2014, I found Tasty Trade, which I think a lot of people know. And they have a great business model because they're more of a broker. So they don't hold anything back. They want you to know everything they can about options. They'll tell you everything. And I never really traded like them because I always back tested their stuff and I didn't like the results. But it really helped me get a good base understanding. I had a really good understanding before, but then it just kind of took my level up. And then I found a friend of mine, his name is John Pope, and he asked me to evaluate some options courses because, I'd already had some experience with options. So I said, okay, sure, I'll check some of them out. So I probably checked out, I don't know, 25, 30, 35, 40, something like that. Different ones. He checked out a few courses also. And, I just looked at a bunch of instructors and I'd always kind of back test what they were doing and it didn't work for me. I didn't like it. It didn't work out until 2017 when I found a great course. It took me to that next level. And that's where I was able to really kind of compare and contrast a lot of things. And it made it to where I can evaluate a course easier or faster. And one of the things I found it out, I kind of narrowed it down to really kind of one thing. I asked myself, what's the most efficient way to evaluate courses? And I realized the best way is if I can see the instructor's P&L. So I started going on YouTube and asking in the comment section for the instructor's P&L for these guys that were on YouTube all the time. And nobody would share their P&L with me. I thought they would because, they were making all this money and everything according to them. But none of them showed their P&L. So I thought, what's going on with these guys? I mean, what's wrong with this industry? So I decided, you know what, I'll show my P&L. That way I'm not going to ask somebody to do something that I'm not going to do. Right. So I started showing my P&L on I started a YouTube channel and nobody watched it. Nobody cared. So I thought, okay, I'll combine these things. I'll look at some other courses. I'll record what I'm doing and I'll show other courses. And I'll be as objective as possible. I'll try to make money following these guys. And if I make money, I'll endorse them. And if I don't make money, I won't endorse them. And so that's kind of how I got my YouTube channel started. And that's kind of how we met because I think I we were talking on one of your videos, I think, about something. I think it was
Yes.
about your win rate or something. I asked you kind of a detailed question.
Yeah.
You answered. You always answer all my questions. That's what I like about you. And then it kind of went from there. And, I ended up evaluating your course.
Yeah.
But as far as for my channel, what's your kind of background and where are you coming from?
So I was always fascinated by trading. In fact, I did my first trade when I was still in high school. And this was back in Germany. So the accent that you're hearing, it's a German accent. And in high school, it was in 1989. And I wanted to become a trader. And in order to trade at that point, in order to open an account, you had to actually go to a local bank. I mean, there weren't any online brokerages or anything like this in 1989. So this is where I went to a bank, and in Germany, you go to Deutsche Bank, right? And I talked to the banker and I said, hey, I want to open a trading account. And he looked at me, and I mean, I was 18 years old, right? And I mean, this is where he said, really? And I said, yeah. And I brought all my disposable income, which is 50 Deutschmark. That's the equivalent to what? $50, something like this. And he looked at me and said, no, that's not going to work. And I said, please, 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 I want to be a trader. And so I stayed in his office long enough that he said, all right, let's open this account. And so we opened an account, and he said, okay, now that you have an account open, what stock do you want to trade? I said, oh, I didn't think about this. So I asked him, what stock can I trade with 50 Deutschmark? And this person said, well, right now, one of the shares that is trading at around 50 Deutschmark is VW, Volkswagen. You don't know the car manufacturer. And I said, done, let's buy one share. So I bought one share of VW in 1989. Now, I got home, and the next day I was so excited. So I was at school, and during the first recess break, I wanted to know how I'm doing. And 1989, we didn't have cell phones where we could check quotes. So I ran to a payphone. Carl, you remember payphones, right? Inserted my 20 cents, called the banker, and I said, hey, how are we doing? And the banker said, well, right now the stock is up to 50 Deutschmark and 20 cents. And I said, yes, this is working. I'm making money. So during the second recess break, same thing. I ran to the payphone, inserted my 20 cents and asked, how are we doing? And he said, well, we're now up to $50.40. And I said, this is amazing. It is working. So as soon as I got home from school, I get to our rotary phone, right? I mean, 1989. I don't even know how long ago this is. I'm dating myself here. Anyhow, called the banker and I said, where did we close right now? And the banker said, well, we closed at 50 Deutschmark and 50 cents. And I said, yes, I got it figured out. So next day, the same thing. I called the banker during my first recess break, during my second recess break, and as soon as we got home. Now, on the third day, and my, what is it now, seventh call to the banker, he said, Markus, out of curiosity, how much money do you want to make with this stock? I thought about it, and I thought, I invested 50 Deutschmark, so if I could make 10 Deutschmark, like $10, this would be 20%. And this is where I said, I want to make 10 Deutschmark. And he said, done. Come to my office, I'll give you the 10 Deutschmark, but stop calling me. So this was my first trade, and it was my first profitable trade, but this is where I quickly realized this is not a sustainable trading strategy, right? I mean, how many more times can you do this? And I also realized that my account was underfunded. Now, in Germany, I grew up where my parents said, you need to get a good job. You need to go to college, which I did. So I have a degree in computer science and economics. None of this is what I'm using at all. So that was a kind of a fun experience in college. And after this, I started working for IBM. And you see, after climbing the corporate ladder, I got burned out. So in 2002, I decided I need to quit. I need to quit. And this is what I did. September 2002, I quit IBM, moved all the way from Munich in Germany to Austin, Texas, to become a full-time trader. I came here to the US with $30,000 in my pocket. And out of this, I put $10,000 away for business, for living expenses, and $20,000 in my trading account. And this is how I got started. And Carl, you just mentioned it. I mean, talking about blowing out trading accounts, I managed to do that in the beginning of my trading career. So I wish I could say, oh yeah, ever since I moved to the US, I immediately started making money. No, I lost a lot of money in the beginning. And after a few months, I actually thought, you know what, I can't do this anymore. I have to go back to Germany and get another job. But this is when I really, like you, right? I mean, I'm hard-headed. So I sunk my teeth into this. I started analyzing my trades, and I wanted to know, what am I doing right and what am I doing wrong? And this is where eventually at some point it clicked. And well, as they say, the rest is history. So this was since 2002. I've been living here in beautiful Austin, Texas. I'm loving it here. I'm trading, I invest in real estate, and I do have a business called Rockwell Trading. So this is what I'm doing these days. This is how I stay busy. And I have a YouTube channel very similar to you, and I share what I do in my own account. So I share the trades that I'm taking, the strategies that I do, and that's pretty much me in a nutshell. Now, 51 years old.
Yeah, I'm 53 and I live in Clovis, California, which is in Central California.
All right.
And what got you into options, though? Because options really, for me, are the only way where I could find an edge.
You see, it's super interesting that you asked, because in the beginning, I was a day trader. I love day trading the futures markets. And because stocks, I always found stocks super boring. But anyway, this is just me, because they tick up, they tick down. You have to pick the right direction, right? And with futures trading, you already had leverage, and it was fascinating. And then I don't know, maybe 5, 6, 7 years ago, I started with options, and I'm just loving it because you still have the leverage. And as you said, there are so many different strategies that you can apply where you can actually trade with an edge, which I think is really, really, really cool.
Yeah. So what, as far as my review, I mean, again, one of the things I like about you is you answer every question. You're not afraid of anything. So, and you show your P&L. You know, we're the only two, I believe, on YouTube that show our P&L. There might be. I left out someone here as far as someone that shows their P&L, that has a reputation for showing their P&L, and that is David Jaffe. I wanted to just add that in here. A few other guys that do it, but I don't really know of them. I mean, there might. Do you know of any?
I don't know, and I haven't recently checked. I mean, to be honest, I follow your channel because I love it. Let me just bring it up here really quick because I want to just share my screen, show your channel, because what I love about it is all the review videos that you do. Let me just, there we go.
I mean, occasionally I'll get an email where a guy says he's showing his P&L, but I don't really, you know, it's just a temporary thing, or he's only been doing it for a few months, you know, not anything consistent yet that I've seen.
Right.
I've seen a few people do it, but then they stop after a while. So
okay,
that's one thing I like about you. So you're out there, your P&L's right there, you know, and
yeah. There we go. This is your channel, right?
Yeah, you got the Channelytics thing. I don't know where you got that. That's pretty cool.
Oh, it's this plugin TubeBuddy, because I always want to see how is everybody doing. So yeah, I think it's a free plugin, or costs like $19 a month or something like this. Yeah, let's just look through the videos here. You started because you said in the beginning you just shared your P&L and nobody really cared, right? So at some point you started doing these review videos. When did you start doing this? Here, I think.
Yeah, that was kind of the first one that kind of people paid attention to.
Yeah.
Because you can see the other ones below that were, you know, my portfolio options, P&L and I did them every single day.
My gosh, look at this. TrueTrader.net, 21,000 views.
Yeah, that was the first review that I did. And it just, you know, you notice I do, it takes me like 3, 4, 5, 6 videos to do a full review because I actually take the course.
Right.
And I show you, you know, exactly what's going on. I like to try to do it with a $25,000 account. Sometimes it doesn't work out that way, but I always try to take the course and do exactly what the instructor tells me to do to see if, you know, do I make money? And it's usually about a month long. So do I make money over that month period?
Yeah. No, I mean, this is an interesting business model, and it's a little bit tricky because you've said, okay, there's a few things that you use to evaluate a course. So you have, for example, I believe it's 16 criteria. Is that correct?
I do.
Yeah. So you have 16 criteria. And of course, the the first and most important one for you is where you say, okay, I need to make sure that the instructor is actually showing the P&L.
That is correct. I mean, that's like the number one thing. I mean, if you're not showing your P&L, why are you not showing your P&L? If you're making money, you would show your P&L, right? I mean, that just makes sense. So why are you not showing your P&L if you're not? No. Well, I know I have those questions here. Okay, here they are.
It's quite interesting, Karl, because you see, for a long, long time, I did not share my P&L. And there was a reason for it. Because when I was still trading futures, I was as an educator for trading futures, I was regulated by the NFA and the CFTC. And the NFA and the CFTC, they are basically like the FTC on steroids. And let me just bring up my iPad here. So they have very, very, very specific rules of how you can communicate with the public when you are talking about your services. And I want to zoom in here because one of the things that they have is where you see here that you cannot include any specific numerical or statistical information about the past performance of any actual accounts. So we're talking about real accounts here. So you cannot do it unless it is representative of the actual performance for the same period of all reasonably comparable accounts. So this means that if not, everybody who watches me, whether it is on YouTube or takes a course, is achieving the same results, I'm not allowed to do this. And this is where it gets interesting. But again, as you know, I'm no longer regulated by these guys, so I don't care.
Yeah. So as far as being regulated by them, what are you doing to be regulated by them? But what falls you? What puts you under that category?
It was that I had actually a course that taught how to, excuse me, how to trade futures contracts.
Okay, so it's in the futures portion of the thing.
Yes. Yeah, this is that's why I said this was way back, so it does not apply to stocks and options.
Okay.
But this is what I've been doing for a long, long time, and this is where I thought, geez, the last thing I want is get in trouble with these guys, right? Because you never want to get in trouble with any guys who work for an agency with 3 letters, right? I mean, IRS, FTC, NFA. I mean, anything that has 3 letters, you definitely don't want to do this. So
I'm glad that you brought this to my attention, because I know I've heard of a lot of hedge fund managers and other guys say they can't, for regulatory reasons, they can't state what's going on. I'm like, where is this? So I'm glad that you brought this up.
I'll send you the link, Karl. I'll send you the link.
Yeah.
So that's one of the things, and this is where it goes back to it could actually be misleading, right? Because here's the deal: I've been trading for a long, long time. I have a lot of experience, same as you. And this is where I feel when I share my results, they're not representative. This is not what you should expect right away when you start trading. I mean, if you're new to trading, I'm trading a $250,000 account publicly here. So I have a total of 7 accounts. I do trade some other accounts, and but this is the one that I show. And so I am taking trades a certain way because I have the experience. It's almost like right now I'm learning with my daughter how to drive. So my daughter is 15 years old, so she has the learner's permit. And right now we are behind the wheel. And of course, I, as an experienced driver, do things differently. And this is where I think that my P&L, I'll be happy to share it to show that I'm a real trader. And Karl, you're absolutely right. I do believe that it is important that people are sharing their results so that you see they actually trade, right? Because we see too many people in this industry who are selling courses or pretend to be educators, and they never ever place a trade. I think recently the FTC cracked down on quite a few guys. There's something odd with my...
Yeah, so I think there's 2 things here. One, you're talking about people having expectations based on your results. That's one aspect of it. The other aspect of it is, are you a credible instructor? Because are you actually able to make money trading? Like, can you teach other people? If you don't make money trading, are you really eligible to teach other people how to trade? I say no.
Well, and this is a good
Note
point. You
that.
see, for example, in order to teach my daughter how to drive, I need to have a valid driver's license, right? I mean, it's not that if I would have never driven in my life, I have no business of teaching my daughter how to drive, obviously. So in many other areas, there are certifications. In this industry here, there's none, right?
Exactly.
I mean,
So you've got a
so
bunch of people that don't have their driver's license and they're out there teaching people how to drive.
yeah.
That's where I'm like, hey, show me your driver's license. You know?
Right. So I believe that this is an important part. I don't think that this is how you can evaluate a course of whether it is good or not. And it's only one of your 16 criteria. So this is why I'm glad that this is not the only criteria, because Carl, I mean, you have been trading at the same time as I traded, obviously, right? Because you have been using the strategy, you have been using the software that I'm using. So we had the same strategy, we had the same software, but we had very different results, right?
Right.
You
So we can
experienced
talk.
during the time when you were trading it, you experienced a few losses. And
Yes. And
during
so
this time,
we can talk about that because I think we need to break it down into three different trade systems that you offer. Is that correct though? There's like three different trade systems that you're offering.
it's mainly two. Yeah, well, I see how you're getting there because we have the Power X strategy, which is a
Right.
directional strategy, and you can trade it with stocks and you can trade it with options. And I believe based on your evaluation, you said that these are two separate things, right?
So that's
Okay,
kind of
and then
where.
we have the wheel strategy, which is selling options, collecting premium here.
Right. So
Yes.
we can get into the will strategy later. I think that's a whole subject right there in itself. But but your directional strategy, I think you saw that where I had some problems
Right.
in terms of picking the direction. Now, and we talked about this a little bit before. We did talk once before on the phone.
Yes.
And you mentioned that it wasn't the right time to use the directional strategy.
Right.
So, but I didn't know that at the time. Like, there was no criteria for me to say, oh, you know what? I shouldn't be using the Power X directional strategy right now. But you're saying, well, there's different types of markets, and so I shouldn't have been doing it, kind of a thing.
Well, you see, this where, I mean, you're right. I could probably do a better job of implementing this into the software of when to use what strategy. I mean, part of when you're getting the software is that you're getting access to our private community. It's on Mighty Networks. And this is where basically we are posting of when to trade what strategy. And I don't know if you had a chance to be in this community because this is where I'm very specific around these strategies. I mean, on YouTube, it's more in broad strokes, and I try to educate people about trading in general. Yeah, but when it comes specifically to the strategy, so this is where we have our private group that everybody who invests in the software has access to see exactly when does it make sense to trade
Yes, and
that strategy.
I did not do that because I only have a certain amount of time, so I did not get into that private group that
Okay.
I probably came with the software. I don't know for sure, but one of the things that if we talk about, well, I should have been in that private group, and then you would have told me not to be trading directionally at that time. But one of the things that you do with your software is you look at the past,
Right.
and you say, for example, Apple did really well with this strategy over the last 1 year. And you're like, okay, if it did well over the last year, it should do well going forward.
Well, at least for the next trade.
For the next trade, at least.
Right. So I'm not saying that if it did well
forever.
in the past year, that I will trade it from now on forever. The idea is that, I mean, this is a short-term swing trading strategy. I'm trying to take advantage of short-term swings in the market between 5 and 20 days. And in order to do this, I need to have a stock that moves in these waves, right? And some stocks do and others don't. And this is why the software scans through all these, I think, 9 or 11,000 stocks. I don't even know how much we have in the database to find the ones that are great for the strategy. So I do not try to find a strategy for a stock. I try to find the right stocks that are great for the strategy. And my assumption is, based on my experience, markets do have a memory. And we see patterns repeating all over. And this is where I say, okay, if it has shown a really nice small trends in the past, it is very likely that it will continue this behavior for the next 5 to 20 days. That is my horizon here. And then I might not ever look at this stock again, because
based on that, kind of like, I remember you saying, well, January wasn't a good month. It was choppy. But if I were to look at, let's say I were to go into the software in February, it would show stocks that had a success for the last year, and including January. So for me, that would, it's hard for me to differentiate, should I have not been in there? Should I have been in there going long, or, going directional?
No, I agree, Karl. I absolutely agree, 100%. This is why I say it's almost like learning how to drive with my daughter, right? In the beginning, this is why I say, in the beginning, let me sit next to you through this community, right? And then after a while, you're getting the hang on it. In the same way, I mean, my daughter and I, we were planning to do at least 50 lessons together. And so after 50 driving lessons together, and I understand that you might not want to spend 50 hours with me, but anyhow, after 50 hours together, this is when I feel comfortable enough that she can make decisions on her own. And right now, I mean, we're on lesson 15. So I'm still directing her a lot and say, okay, be careful, this car might merge. You know how it is, things that we do automatically. And this is where I think that after the first maybe 30 days, 45 days, right, it'll help tremendously when at first I show you what I do, and then you get the hang on it. So almost like learning a new skill. I believe that not only trading is a skill that you need to learn, but every trading strategy is almost like a new skill. I mean, doesn't it feel to you when you're taking these courses that you're almost learning a new skill every time?
I feel like I don't know if I feel like I'm learning a new skill. I kind of feel like I'm rehashing old things that I tried in the past, but just with a little bit of a different angle. So I guess you could say, yeah, there's a little bit of a different skill set there. While I still remember this, the way you look at the past, you look at it as it could be a predictor for the future. And the way that I look at the past is I look at it as a way to back test things and to see how I can control my risk in the future. So I think we look at the past differently. So I think
that's fine, because ultimately as traders, we need to have different opinions. If all traders had the same opinion, there wouldn't be a market, right? I mean, because if I want to buy an option, you need to sell it to me. And if I want to sell an option, somebody else needs to buy it from me. So I'm really glad that we all have a different perspective on the markets, because otherwise the markets wouldn't exist.
Yeah, well, I agree. And, as far as the evaluation of your course, I mean, it's never going to be perfect. And, people can watch the video and they can see what happened. And we can talk about the wheel strategy if you want to get into that a little bit.
Well, yeah, I had a few questions regarding there. So, yeah, I know that you have your 16 criteria. One of the things we briefly talked about this when we talked over the phone before is I find it extremely difficult to evaluate not only a trading course, but anything. Because just off guard, what is the best car? What is the best car, Karl?
Currently, I'm driving a Dodge Challenger, so I think that's the best car.
Okay, Dodge Challenger. No, again, and this is where, based on your criteria, it probably is.
Right.
No, I have a Tesla. Love the Tesla. I also have a pickup truck. Love the pickup truck, and here's why. My kids are both active sailors, and regularly I have to haul boats, put boats in the water. I mean, I couldn't do it with your Dodge. So for that purpose, right? I mean, if I would evaluate a car based on being able to tow things, the Dodge would probably not rank very well, right?
Well, my Dodge pickup truck would do pretty well, though.
What?
I also have a pickup truck too, but Okay, so
So no, I just want to go back to this.
what's
This
the
is where
point?
I think when evaluating anything, that the person who is evaluating it always has two
That's something,
biases, right? I mean, one
right?
is the
So I
confirmation bias, and the other one is a selection bias, because you have certain criteria, and if we would change the criteria, the evaluation might be different. Wouldn't you agree?
right, and so I guess the criteria, one of the criteria is that I'm using is the way that I trade because I use this is what we talked about before. I use strict black and white rules to trade. There's no subjectivity in my trading whatsoever. And so because of that, I have that ability to compare everything that I do compared to that. And that's how I do it. And I
So,
remember you
and
said,
you're saying
why don't
because
I?
you're also offering a course, right? Which you're tracking with your small account, and
Yes.
so I haven't bought this course and I haven't had access to this course. So full disclosure, I don't know this course. But you're saying in this course the rules are so black and white that if somebody buys this course, he's getting right now exactly the same results as you do.
Yeah, if they open the trade the same day that I do or the same time that I do, they're going to get exactly the same results if they open and close it the same time
Well,
that I
what
do. And
determines the time?
well, I like to look at the market around on the West Coast here around 7 to 7:30 and make my
Right.
decision at that time every day. I recommend that for my trading, but people can do what they like, that they can do it, they can trade it, they can look at it 6 times a day, they can look at it once a day, but I do recommend you look at your account once a day. And at that time when you look at it, you make the decision, it's obvious what the decision needs to be. Usually the hold times for that particular trade are 14 to 21 days before you do anything. So you really don't do anything. You just look at your screen for 5 seconds and you go on, do something else.
Okay. And so this is what you're tracking in your small account, the $15,000.
Correct. Correct.
So, I mean, I took also a quick look at it, and it seems that over the past few months, it has been doing okay.
Yeah. I mean, if you like conservative, no, low drawdowns, this is great for you. The returns haven't been as well in the last few years. It's averaged about 14.5% over the last 10 years. But you just never know what kind of market you're coming into. I know one year I did like, I don't know, 30 or 40%. And then one year, maybe 3%, so you don't know what kind of market you're coming into. But
Right.
I do know this, that you're not going to have big drawdowns. You're not going to have I think the largest drawdown I've ever seen is maybe 8% or something like that with the account from peak to trough. So, I
Right.
mean, if you want to just double things up and have maybe a possibly 16% drawdown, you can double your returns right there. You can shoot for 30% over the last 10 years. I'm not saying that's going to happen in the future,
Right.
but I'm just saying those are the numbers that were back tested out with black and white rules. It's difficult to really run any back tests with anything unless you have black and white rules also. So that's like if I ask you if you back tested your system, well, I don't know if you have, because I don't know if you necessarily have black and white rules. So, how can you back test it without that?
Yeah.
So
I
that's
mean, I do on the individual stocks, but then it's a matter of what stocks to pick. So I absolutely agree. I absolutely agree that there is still a discretionary element in this. But this is where I do feel that a discretionary trader can outperform a purely mechanical trader. So I mean, on the small account, I think over the last 5 or 6 months, you're around up $600. That's all
yeah,
right.
not yeah, $600 on a what, 15,
$600, right? Which
14,000
again,
something.
and this is where I see, Carl, I would never say that this is a bad strategy because, first of all, you're making money. Secondly, you're not losing money. So, therefore, this strategy is already ahead of 95% of other trading strategies that are out there or that are being taught, right? So, this is why I would never say it's a bad strategy. I say a strategy, it's not inherently good or bad. It's good for you or not. You say that you're very risk averse. For you, having a low drawdown is super important. And therefore, it's even more important than having a high return per year. So you would rather have a super small drawdown and see around 14% per year than having a larger drawdown and possibly see 60, 70, 80% a year. And there's absolutely nothing wrong with it. That's what I'm saying.
And my my larger account, I just made a new video and I'm going to call that the Synthetic Dragon portfolio.
Yeah, I saw that.
That one's a lot. That one's been back tested over the last 10 years. It had a 16.5% drawdown only on open positions maximum. And that thing is averaging, where is the number? What are the numbers on that? 20? I'd have to look it up, but I can't remember off the top of my head, but 20% maybe? It's up there.
Yeah, but you're not teaching this.
What's that?
But you're not teaching that one.
I cannot teach that one because I don't own the rights to that particular trade structure. So I do recommend a course. Now, that's the same course that I took in 2017. And that's where I learned about that trade structure. And I learned a lot more about options. And that's the one I always, in fact, in this video here on my channel, I'm going to have an affiliate link for that course. But I can't sell that information because I don't own it. So I'm not going to be one of those guys that, that steals information.
I understand and I respect this. And this is where you're saying if somebody took that course that you're recommending, he or she would get the exact same results that you're getting.
No, and I cannot say that because I've developed my own trade plan around that structure. Now, if you sign up for that course, I'll give you a trade plan, a very simple trade plan to use that will perform very well and very similar to what I'm doing. But I can't tell you exactly that you're going to do what I'm doing unless you exactly do what I do. But I have black and white rules. So if somebody knew my rules, they would be getting the same results as me.
This is where it goes back to, okay, so you're trading live, you're showing your P&L, but this is not what others who are following your course are achieving, because they would get the $600 on a $15,000 account.
Right. Or, I have a minimum of $8,000 per tranche. So they could have made that $600 on $8,000 if they were, because I happen to be trading with 14,000 and something. So when I get to 16,000, then I'll double up everything. So, it's different. Depends on how much money you have, obviously, but the actual percentage, returns are a little different because of that. But the results, how many wins did you have? How many losses do you have? That's all going to be pretty much the same. Yeah. Because it's black and white rules.
Right. But this is for the small course because that's
the small one. Yes. The small one.
Right. So this is where I see, Karl, this is where it gets different. I mean, for all of us who are educating and who are trying to teach others how to do this, because you're showing, hey, this is how much I'm making in my large account. And, oh, you can buy a course and you're making $600 in this account. So that's the tricky part, right? This is where I really, really love it that you're showing the real P&L. And it would be great if you could show others how to achieve those results in the big account. Yeah, and I understand your restrictions. I mean, and I fully respect it that you say.
So as far as once they sign up and they use my affiliate link, which I know who they are, then what happens is they'll private message me within the course because there's a Slack channel.
Yeah.
And then within the course, I'll answer any question they have about what I'm doing, how I'm doing it.
Okay.
And I'll actually provide a simple trade plan for them that would be very easy for them to implement with this particular trade structure that is the key that I believe to making money in the market. Now, my 5-step, I can't use that. It's a portfolio margin type account. You have to have portfolio margin for that particular trade structure.
Okay.
But in the 5-step, my smaller account, I was able to kind of duplicate that in a regular margin account. But it's a lot less efficient. So it's, it's not as good. Obviously, you can see that based on the results.
Yeah.
But yeah, I mean,
yeah, I just have another question, a different topic, where we go back to the confirmation bias, right? Where it's difficult to evaluate pretty much anything. I saw that you just recently posted a video where you evaluated a covered call strategy, right?
Yes.
So this was super interesting. Tell us a little bit about this video, what you did there.
So I'm actually starting a new series because a lot of instructors, they have this trade structure that's a regular trade structure that everybody knows about. Well, I mean, new people don't know about it, but as a experienced trader, everybody knows about it. For example, maybe the covered call or an iron condor or an iron butterfly. So what I'm going to do is I'm going to take these trades, for example, the covered call, and I'm going to take them through, because if you're a premium seller, you sell options.
Right.
There's an edge. In order to extract that edge, you want to back test the system. In order to back test it, you need to look at it. The first thing you want to do is you want to break it down, and you want to break it into pieces, and you want it to not work so you can eliminate it, right? And so the way to do that and not waste your time, you don't want to back test it for starting on January 1st, 2008 and take it all the way here to present. What you want to do is you want to take it through the toughest markets and see if it lasts and makes it. So there's the bull market, there's a sideways market, there's a grind down market, and there's a crash market. Those four markets, if you take it through those four markets and it survives, then you spend the time taking it for the last 10 years. So I'm taking covered call strategy and I'm taking it through all the markets. So far, I've only done the bull market, and you can see that it vastly underperforms just the buy and hold strategy in a bull market. And I'm talking about the covered call strategy.
Right. Is this what you expected from the
Yes,
strategy?
It
you
is.
expected that. Okay. So I looked at the video because I wanted to reproduce the results. And I believe that you said the covered call got made $3,062.
Based on about a $12,000 capital outlay, yes.
Right. So I tried to replicate this, and I think I came really, really close. You use a very specific software for this, and I believe that you have links in the description. So based on what I saw, I had a total return of $3,137, which is close enough to your 3,062, right?
Yeah, that looks about right.
So the amount risk was based on the last price of the SPY. So the capital requirements here are slightly higher. And you said you used margin, so it would be cut in half. Yes. You were going with 12,000. I was going with probably around 13,000. But
yeah,
you think I did it kind of correctly, replicating it?
Yeah, you look like you did it pretty good.
Pretty good. So here's where I thought, okay, you were testing it on 2017. And this is where I said, you know what? I want to see if a covered call does not outperform, because I have a bias. So my bias is differently, where I believe that option trading strategies or active trading strategies, this is my bias, active trading strategies are outperforming buy and hold. That's what I believe. And I could be completely wrong. I'm wrong most of the time. So I thought, okay, it would be cool to see if we didn't use a 40 delta, what happened if we use a different delta? Have you had a chance to test that?
I have not. It's kind of difficult. That test, took maybe, I don't know, 3 hours or 4 hours.
I hear you.
So it's like, okay, if I change the delta, now I got another. Okay, good. So that's interesting right there. I like that. So
interestingly enough, the 40 delta was the worst performing.
Wow. Okay. So
if you're going to a lower delta, you see a 30, it goes up to 3,700. If you go to a 20, so the lower the delta, the higher the return. To a point.
That totally makes sense.
Delta. Well, this is where with the 5 delta, you're basically mirroring a buy and hold strategy, as we both know, right?
Yes, that totally makes sense in a bull market. Totally.
Right. So this is where it was just interesting, where it goes back to so difficult to evaluate it, because if you come to the conclusion and say, well, I've proven beyond a shadow of a doubt that buy and hold will outperform selling covered calls, I, as the defense attorney, would say, Your Honor, may I provide additional evidence that support my theory as the defense attorney here that says that active trading will outperform buy and hold? Okay.
So did you take into consideration that for the last 20 years, if you were not in the stock market, if you're not in the market, the 20 days, the highest 20 days, the 20 days that were the best performing 20 days, the buy and hold strategy actually did not make money. So if you're writing a covered call, I guess the further the delta away, the better off you're going to be, of course. But the closer the delta, that's going to be a major contributor, a major factor in how that covered call works.
No, I understand, Carl. And this is where I don't want to go back and say, covered calls work or don't work. I just want to show it is super, super difficult. And this is where I don't know how you do it to evaluate something as objectively as possible. All I'm trying to do is make another case and say, Your Honor, may I provide some additional evidence that the conclusion that you had at the end of the video where, well, I knew it, buy and hold will outperform covered calls, where I'm just poking a few holes in this and say,
yeah,
and jury.
and now when we get to a bear market, then my 40 delta is going to outperform the 5 delta, right?
So, it could be this. Why I'm following just your videos, and I wanted to see what will be the next video.
So I'm trying. That's why, So that's why I want to take it through all the market types, so I can say, okay, well, how does it do in this kind of market? How's it do in that kind of market? How's it do in that kind of market? So that's really the main point that I'm making is how does it perform in different markets? So within the market itself, you can always change that, but when you change that, that's going to have an effect on how it performs in the other markets. Also, it's going to be worse. You use that 5 delta one, it's going to be worse in a grind down market.
Oh yeah, I agree. I would never do a 5 delta. There's no premium in there.
Yeah, there's no premium.
But that's kind of with covered calls that often a 10 to 30 delta is very common that people like to use. Again, depends on the trader.
Yeah. So I figured, well, let's see how that performs in each market, different market type.
Yeah.
Now, obviously, I'm pretty sure. Well, I don't know about the 5 delta. Did that actually outperform the buy and hold?
Let me show it to you again.
I don't remember.
And again, the results that I tested, since I'm using a different software here, I'm slightly off. It seems that mine is slightly more optimistic because with the 40 delta, you had like $70 less.
Yeah, no, I'm sure you're totally accurate. I mean, it looks.
I think we are in the ballpark, right? I think we're in the ballpark. So here,
47.
No, barely, because you said the buy and hold would have yielded $4,684.
Okay.
So I don't think that it would really outperform, but it's not as bad as it looked on the 40.
Yeah. And so I'm trying to, so when I go into the next 3 different market types, we're going to see how that covered call performs in those markets too. And I have to use the same 40 delta. I could have used 30. I could have used 25. I could have done a lot of different things, but I have to keep it at one thing. And I've got to see, my goal is to see how the covered call performs in different markets. So and we know that it will most likely underperform in a bull market compared to buy and hold. It'll probably outperform in a down market. Maybe we'll see. I don't know yet, but there's certain things, so here's my question for you. Yeah. This one makes it really difficult. I can't let's say that my cost basis goes down below the strike. We've talked about this before. Now, do I use that same strike that is not giving me any premium whatsoever, but I won't take a loss? Or do I go back to the 40 delta and just take my premium and, probably if the market goes up and recovers, I'm going to take a loss there because I'm not recovering.
Well, this is where it goes back to, you said that you wanted to go for 30 days to expiration. See, when I like to sell premium, I like to go much shorter term. I like to go for anywhere between 5 and 10 days. That is my sweet spot, because this is when the way how I trade, I see that most of the time decay is kicking in and the theta is really accelerating. So this is why here, I believe, I haven't tested it yet because, as I said, this testing takes several hours. So I haven't tested it with a shorter expiration. Now on SPY, you can trade like on SPX, you have 3-day options, right? That expire 3 times a week. So would be just interesting to see, because this way you're much closer to the current prices and you might not run into that problem. But you're absolutely right. It's one of the challenges where, again, it goes back to how do you like to trade it?
Yeah. So, there was something else that just came to my memory. We talked about this, I think, in an email where we talked about a crash market that if you were, what were you running, a wheel strategy?
Yes.
And you mentioned that because you only go 1 week out, you're able to recognize that a crash could be coming. You remember that conversation? And
Yes.
you were like, no, I'm not gonna, be in that situation. I'm gonna cash out or whatever.
Right.
And that comes to the same thing where you're saying that you can kind of look in the past and say, hey, a crash is coming. But that's where I don't, we're not, you and I probably disagree. Like, it's like driving by only looking in the rearview mirror. Like, that's not going to work. I don't know if you can identify a crash and fast enough or quick enough in order to kind of go to cash and not take that major hit. You know what I mean? If you're in a wheel strategy, for example.
Well, I mean, first of all, before we have a bear market, we have a correction, right? And a correction is defined as going down 10%. And this is something that recently happened with the NASDAQ. And the NASDAQ is recovering right now. The Dow and the S&P is right now still are hovering at all-time highs. So can it really happen that within 1 week, we are going into 20% or more from the recent high? Yeah, I don't know. Could be. Anything can happen in the markets. Anything can happen in the world, as we have seen. These are what they say the black swan events, but usually they don't happen overnight. I mean, even if you look at events that were completely unpredictable, 9/11. I mean, 9/11, right? We never had anything like this. And how long was this blip? I mean, it recovered within a week or two. The 2008 crisis. I mean, this was coming. We were already in a downtrend by the time we saw this. And so right now, as the markets, the NASDAQ, we're still okay. We're not even in correction territory right now. We are approaching correction territory. So I'm keeping an eye on this. Absolutely. With the Dow and the S&P, I think we're just fine. And a market, when it goes into a bear market or when it is really crashing, it starts slowly and then it accelerates. We can actually take a look at the charts here of what happened last year, because we have now the 1 year anniversary.
Yeah, March 2020. That was the 35% drawdown within a couple of weeks.
Right.
2 weeks. So that was pretty fast. Like, that would be difficult to get out if you were in the wheel strategy. Now, luckily, the market recovered. Okay, but in 2008, I think that took 4 years to recover from once it started going down all the way to get back to where it was. And then, of course, in the year 2000, that was probably 10 to 12 years before you recovered with some of the stock.
And you're absolutely right.
You can't really
see when the market is going down.
Recovery.
We have something like this, and then we have a quick bounce. And then we go down again. Look at this. And then we have a quick bounce. And then we go down again, and then we have a quick bounce. And then we are no longer going down. So with the wheel strategy and by bringing down the average cost basis, all I need is a bounce of 2 to 3 days to get out of this at break even or at a small loss. So, and again, Karl, I'll be the first to admit it is a risky strategy. Absolutely. I mean, I'm not saying that this is the safest strategy in the world. The safest strategy in the world is buy bonds, right? Or put your money into a savings account. That is probably the safest strategy in the world. When trading, there's risk. And the wheel strategy absolutely is a risky trading strategy. And it lulls you in because it works for a really, really long time until it doesn't. But you have to stay on guard, right? I mean, this is where you're getting lulled in as a trader because you think, oh my gosh, I had 150 trades, and out of these 150 trades, I didn't have a single losing trade. And you think, oh my gosh, this is a 100% strategy, 100% winning percentage. And it doesn't exist. It does not exist in the market. I mean, sorry, it may exist. I don't know it.
But you just said it, it works until it doesn't. And so are you willing to take those drawdowns? Obviously, you're taking some drawdowns right now on your open positions, not your closed positions. I know you've separated those two out, but for me, those two things aren't separate. Like, if you're open and you're drawn down, that's the same thing as being closed and drawn down. That's my opinion. You have a different opinion about that.
And I will not fight it. I will not fight it. I mean, recently, I talked to somebody about, okay, when do you take money out of your account? For me, it's based on realized profits. And the other trader said, for me, it's the net excess liquid capital. And I say, you know what? I won't argue with this. Whatever works best for you. Every trader is different. That's why I keep saying, Karl, if we would be all the same, we wouldn't have a market.
Yeah. And that's the thing about me. Like I'm always looking at my net lick. Like if I were to go to cash right now, where am I? That's my main thing that I look at, my P&L, And so, you've had a couple problems here recently with Apple. I call them the wounded soldier, Apple, and then Ride is also a wounded soldier.
Yep.
Wounded, you might be able to patch them back together and they might get back out there and fight. Ride was definitely a 50% drawdown for you. That's not very good, especially with the wheel strategy. You might make it out of there.
Right now I'm very actively bringing down. Let me just do I?
Yeah, your break even.
Share my screen. Do I? No. Sorry.
Those were the things that when I did my course evaluation and when I talked about the wheel strategy, these were the kinds of things that I talked about. Where you didn't really have some set rules, but now you do. So I have to compliment you for that you have actually implemented some rules for these types of situations where before, as taking your course, I didn't see these rules in there, but now you have. In fact,
Karl, this is where I really, really appreciate all the feedback, and this is why we have such an active community, because this is where I'm getting a lot of feedback, and we're incorporating this. I said it earlier, the reason why today was a super busy day for me is because right now we're actively working on the PowerX Optimizer 2.0, so on the latest version, and I'm super excited about this, and I've been incorporating a lot of feedback that I got from you and others into the new version that we have here right now. So I'm super excited. This is just a beta or an alpha right now, but we are planning to release it in the next 2 weeks. And yes, so it is way more rule-based right now than it used to be. So this is where I appreciate it. You see, I believe that this is where I approached you and said, would you mind evaluating my course? Because I want to make this software and this course the best in the world. And I understand that there's still room for improvement, but this is my goal. My goal is to make it the best in the world. And I love it when people are taking it apart and say, well, here is where you could add a few more hints, rules, make it easier to understand, make it easier to execute. And we are incorporating this right now.
So two things on that. Number one, for me, for it to be up there as the best in the world or one of them, I ask for black and white rules, which I think are difficult. Like you said, that it's difficult to do that. And then the other thing is, now that you've kind of tightened down your wheel strategy in terms of more black and white rules, I don't think it's 100% black and white yet, but I'm going to get that out of you because I'm going to back test it based on your rules when I do the wheel. So I'm going to get your rules. If you have the time to respond to me when I have questions about what would you do here kind of thing, I'll create black and white rules around that strategy based on what you tell me. So and I'm going to back test it like that. So maybe you'll find that interesting.
Of course I do. So yeah, this is where you say it might not be for you. And this is where I say, well, you're also driving a Dodge Challenger.
No, I couldn't take the drawdowns. No, I wouldn't. My personal thing, I couldn't put my capital over there where I'd see drawdowns.
I hear you. And this is why I'm glad that you're not, because if we would all be trading the wheel strategy, again, the wheel strategy would stop to work.
Yeah.
Yeah, because if nobody would be willing to buy when I'm selling, right? It wouldn't work. So this is why I'm glad that we're all different as traders. And this is where it gets so difficult to, the best. And I know that I just said I want to make this claim. And this is honestly, here's what I'm basing this claim on. I'm basing it on the results that the users of the software are achieving, because it doesn't matter what I achieve. I'm really, really good. I can look at this. I don't want to, but I could probably trade with a much, much, much crappier software than mine. But this is not the point. So for me, in order to have the best course and the best software is the software that makes those who get it and who are using it money, and a lot of money. And this is where I'm really, really super proud that you'll see it if you ever go into the community, that there are quite a lot of traders who are getting better results than me. they are outperforming me. And I just stand there and I say, yes, yes.
Yeah, so I have two things to say about that. I can only remember two things at a time, maybe one. So hopefully I won't forget. But I do like something about your software that I don't see anywhere else, or I rarely see. And you talk about money management. You talk about allocating capital in a certain manner, as opposed to, hey, just trade this and you'll make money or you will lose money. Well, how much should I put? I got 25,000. How much of that money should I put in that particular trade? I don't get that from other instructors. They don't want to talk about that. So I do like that, the money management aspect of your software.
And you're right. Money management is super important. Have you ever heard about the Ralph Vince experiment?
I don't, if you tell me about it, I might.
Yeah. So Ralph Vince wanted to prove the importance of money management. And he actually took 40 people. And these 40 people were all PhDs, not PhDs in statistics or mathematicians, but all supposedly smart people. He gave them a very simple trading system, and it was almost a rigged coin flip. So he said, you can make 100 trades, and out of these 100 trades, 60 will be profitable. He didn't tell them this. He didn't tell them, but 60 were profitable, 40 were not. So he said, do 100 trades on a $1,000 account. You can risk as much or as little as you want on any given trade. So you could risk $900 on one trade or $2 on one trade, right? And so if you think about it, when you made money, he said also, you're getting exactly the amount back that you risked. So if you risked $10 and you won, you made $10. If you risked $10 and you lost, obviously the $10 were gone. So this system produced 40% winning trades. 60%, 60 winning trades and 40 losing trades. So obviously, if you would have just betted $20 every single time, you would have won in the long run, right? So this is a profitable system. Wouldn't you agree?
It depends
on... Risk-reward ratio 1-to-1, winning percentage 60%. It's a profitable system, period.
As long as you manage the money.
These 40 people lost money. 38 of 40 people lost money. Why? Because of the gambler's fallacy and bad money management. And the bad money management usually was that after a few winning trades, they thought, now we need to bet more. And then you had a few losing trades, right? And after a few losing trades, oh, I'm overdue for a winning trade. So this is why I'm telling this story, because I 100,000,000% agree with you that without the right money management, as proven in this experiment, you can lose money if you have a profitable trading strategy and you use the wrong money management. Yes, this is why I keep stressing it.
That's something I remember Ed Thorpe talking about. Have you read his book, Ed Thorpe?
No,
the Kelly Criterion.
I know the Kelly Criteria. I haven't read his book.
Yeah, so I guess he was one of the guys that developed it, or he picked it up from some guys that worked at AT&T, and he developed that Kelly Criterion, which basically would tell you how to bet once you know your winning percentage. If you're going to win 6 times out of 10, okay, now here's how you manage your money based on that kind of a thing.
Right.
But yeah. Now I'm trying to remember the second thing, but that I was going to say. Hey, we go on to the next subject. I keep forgetting. But I don't know. I guess, like I said before, you can see how I did over 30 days. Oh, that was the other thing I want to talk about was, I'm ready for you, hopefully, to go ahead and use the directional system and trade that live. I hope that you do that, because again, I still have that attitude of, if you're not a profitable trader, how are you going to teach other people how to be a profitable trader? So the P&L thing. And I think you mentioned that you were looking forward to doing that at some point. I know you're doing that with the wheel strategy. So I was hoping that you're also going to do that with your PowerX directional strategy too.
As soon as the market conditions are right? Because this is where I know that you have a system for all 4 market conditions. So I like to have a directional market, either to the upside or the downside, with the PowerX strategy, and a market that is just choppy. And this is what I see since the beginning of the year. I mean, the NASDAQ is pretty much flat since the beginning of the year. S&P and Dow moved a little bit higher. Yes, but if you think about it, in the Dow, there's only 30 stocks, and realistically, as few stocks are moving the Dow here. So there's a lot of trades or a lot of stocks that I like to look at are in the Russell 3000 and in the NASDAQ, just because they they move more. If you look at stocks like IBM, it's not moving at all. If you're looking at stocks like Boeing, yeah, it moves when a few planes go down, which is very, very sad. But overall, it's pretty boring stock. So for me, in order to get the returns that I'm looking for, again, we're all different, but this is where I like to have more volatile stocks that are usually these so-called growth stocks that are right now being whipped around like crazy. I mean, we talked about Apple, right? I mean, Apple is not doing anything right now. So yeah, Apple does not have any direction.
So that's when we were talking about IV rank. I think we've talked about this before, where IV rank might be something that of interest, because, you know, that's how Tasty Trade trades, you know, when they see the IV rank or the volatility of a stock higher than normal, they take that as a sign to sell premium. I think you did that with Ride. I don't know for sure, but yeah, you saw all that premium there. It looked really juicy, so you went and took it, right?
Big mistake.
And it's probably still pretty juicy. Like, there's probably a lot of premium in those options.
There is, and I'm still selling options on Ride, and I'm still doing really well. I think I'm right now up like $6,000. But yes, I'm also down on this trade. The open P&L is around 35, 36, 38,000, depending on how Ride is doing. And this is subject to change here every 5 minutes.
Yeah, you're probably watching it.
Because it'll drive me crazy. I mean, honestly, Karl, this is where I know that the open P&L for you is not that important, because you're the way how you trade, it is not fluctuating a whole lot. I believe that the open P&L was invented by somebody who hates traders and was sponsored by the pharmaceutical industry to sell antidepressants and anti-anxiety medicine. So, you know, I don't know how I feel about the open P&L. And I'm not obsessing about my trades every 5 minutes. In fact, throughout the day, I'm usually not looking at them, because it'll just drive me crazy. And what does it help? Yeah, I mean, money is made and lost when you exit the trade. Mm-hmm. Yeah. And again, I understand your criteria are, okay, how much was it down while being in the trade? For me, it doesn't really matter that much.
Yeah, and the way I handle that is I just look at my account once a day. Like during the March 2020 crash, I made a lot of money, but I just looked at my account once a day, pretty much. I mean, I looked at it more than once a day, but I only was serious about it once a day, because I can't, at the beginning of the day, it's up 1,000 points, and then at the end of the day, it's down 1,000. Like, I can't trade. I'm not trading based on any of that stuff. I just have to take a snapshot, make my decision, and move on.
Yeah.
You know, so I'm sure you have to do that too.
Yeah, because I mean, if I'm not looking for active opportunities to get into the market, why watching it? So this is why I like to distract myself by being on YouTube.
Yeah, you're always here. I lost you there. Hold on.
Oh.
Well, you're there, but I just don't see you. Yeah. Okay. I just, I might have some other questions here. I had some stuff written down.
Of course.
Unless you had other subjects that you wanted to go over.
I have another 20 minutes.
Okay. I guess one of the things that I had a problem with the Power X was that, being able to get fully allocated. And I don't know if that goes back to your premise of the markets weren't correct, or, it's not a trending market, therefore I wasn't able to find a lot of stocks. I mean, is that kind of your answer?
I actually say that's a bonus. Think about it. If you're right now anyhow trading a strategy that you should not be applying to these markets, isn't it great that you're not fully allocated? That the Power X strategy actually, and I'll get better at this, where I actually say, you know what, if there's nothing to trade, then I will actually show nothing to trade. So I think it's great, because during other times when the markets are right for the strategy, you will be way more than fully allocated. You have to pick and choose, right? So yes, this is actually a pro of the software here, or the strategy, that during times when you should not be trading it, it's actually not showing you too many results. And again, I will get to the point where I eliminate these results. Yeah.
Yeah, I guess you could make that point. Were you trading the wheel during the March 2020 crash?
No, I was no. During this time, when it was crazy. I mean, you might have seen it on YouTube that I called the crash, right? But I saw it coming. And so obviously during this time, no. What I was doing as soon as I saw the bottom, I was just selling put premiums. But I sold it more aggressively because at that point, after I saw the bottom formation and the 1, 2, 3 formation that we saw there, this is when I just thought the market is going to recover. And again, this is my opinion at that point, and based on this opinion, I traded. And this is where I used just a strategy where I'm selling premiums like crazy.
Yeah, no, I noticed now the wheel strategy, if you really think about it, it is supposed to be a neutral, market neutral strategy, but in reality, it is kind of a long strategy. And what I've noticed is since the bottom of March 2020, the market's just gone straight up. And I've seen on YouTube, particularly, a lot of people talking about the wheel strategy. Now, I don't know if it's just my own feed, my own algorithm telling me, but I just see like the wheel strategy has just become so popular in the last year since the market bottomed and recovered.
No, I don't think that there's that many people talking about it. I mean, what's the name of the guy? Project Option is talking about it. Then there's 2 or 3 other guys. And again, of course, the YouTube algorithm is showing you based on what the YouTube algorithm thinks that you are interested in.
That could
but
be
if you see that most of these videos are actually older videos, it's not that they just popped up.
Yeah, right now I'm reviewing Matt Giannino, Market Moves, and I know he's doing a wheel strategy also.
Okay.
Right now.
Okay. How is that going? I haven't seen that video yet because I was focused on the synthetic dragon video that you published and the option
test. Yeah, it's going okay. I mean, I'll just say what I like. What I like is the fact that I was able to get on his Discord and actually ask him questions, and he actually answered the questions.
Oh, cool. Yeah.
So, I'm just going to say some positive things for now, and that's kind of where I'm going to leave that.
Okay.
So, but yeah, what was the thing you just said right before that?
I don't know.
We're in our 50s, huh? Yeah, there was something else that you just kind of triggered, but no, that's okay. I mean, I think we have good discussion. I think that we disagree on a couple things, and that's okay. And I think
I'm glad we do, Karl. I'm glad we do.
Yeah, and I hope that we'll be friends. I think we are friends. I enjoy watching your channel. Oh, and I was going to ask you, when are you going to do an update on your goals? Because I'm very interested to see where you are with all of your real estate stuff, and not just.
Oh my gosh, I really have to. I was so focused on the PowerX Optimizer 2.0. I just sold an apartment complex 2 weeks ago. So I'm right now, I don't have any apartment complex in Austin, but I've already located one that I want to buy. It's probably between $8 and $9 million. So that's going to happen. And this was one of my goals, that I'm buying an apartment complex between 8 and 10 million, that I'm selling the one and
so you're not, so you're going to do a 1031 exchange. You're not going to just take that cash.
No.
Okay.
I'm just, you see, the 1031 exchange, it's almost like IRAs. I mean, what do you want to do? At some point, you're getting taxed. It is. At some point, the IRS wants the money. So might as well just pay it now so that your net and don't have to say, oh, well, in the future, I have to pay taxes. So that is going well. Yes, I need to do an update video. I'll probably do it in the next 2 weeks. So as we are talking here, it is March 25th. So the first quarter is over. So it's time to do this. The other thing is I have actually, or I've been looking at buying a resort in Mexico, Belize. So we have been looking at probably 30 different properties, and we have now narrowed it down to 2 properties. So I'll probably pretty soon will fly down there. I just realized that my passport expired. So I urgently have to renew this. Then I'll go there. Just yesterday, I talked to the company about buying the plane. So that is going on. What else was on?
Yes, I'm interested in that too. I've always been interested in that. And I was going to ask you also about your, you mentioned a mastermind. Is that mastermind more for your students, or is that mastermind for guys that are like, I don't know. I don't call myself a student, I guess. I'm more of an instructor type. So is that mastermind for like guys like you and me? or is it more like for your students kind of a thing?
This for my students, it's almost more like a mentorship that we're doing there. So this is where I'm trading life with them 3 times a week, and I'm spending much more time with them. And we do actually meetings in person a few times a year. Obviously, we haven't been doing it last year, but we usually do it 3-4 times a year that we meet in cool places. So we have been to the Bahamas, to Cayman Island, to just spend a week there together. And this is why I'm right now so interested in buying my own resort.
Because that supports your business model, so that works out well for you. That's a good
right. And I ran the numbers. I have no experience whatsoever in running resorts, but I know some people who do, and so I rely on them. And I have been investing in apartment complexes, multifamily, and I know that running a resort is different, but it's kind of a short-term lease that you're doing here. So we'll see. Yeah, and the plane, I'm looking at a Piper Mirage. Super excited about this. It has been my dream for many, many years to just be able to tell my pilot, fuel it up, be here in 15 minutes or in 30 minutes, and then take off.
Now, the Pipers, they have the wings down below, so you can't really see as well, right? Is that the Piper? Cessnas have the wings up atop, so you can kind of see down when you're flying.
It was actually pretty cool. I think they have it on top or behind or in front of me. I need to look it up again. Now that you mention it.
That's something that I always considered when I was looking at that, so.
Yeah, I've been flying a lot, so I don't necessarily need to look under me. I just want to take off here, and the next time I exit the plane, I want to see blue ocean, right? I want to see a tropical breeze and somebody greeting me with a bunch of flowers that they're putting around my neck.
So why don't you do something in Puerto Rico? That way you can live there for 6 months out of the year and not pay taxes.
It's so far away. And it's, I'm not too sold on Puerto Rico. I've been there. I wasn't too impressed with that country. It seems that they're struggling with hurricanes a lot. And it also seems that they're struggling really a lot with poverty and based on what I've heard, corruption. So I don't know if there's a country where I want to live for 6 months out of the year. I could rather see me do this in Mexico or Belize. Not that I want to live somewhere else. Austin is awesome. I'm loving Austin. Anyhow.
Well, okay. I don't.
Yeah, so I'll do an update on this very soon.
Yeah, I don't travel too much myself. I could, but I'm not interested in it really. That's just my personality. I'm more of a homebody kind of guy. But,
and everybody's different.
Yep.
Which makes this world so interesting.
This makes the different traders, right? As you say.
Yep.
Well, okay. Well, I don't know if there's any much else, unless there's anything. I think we covered most of the things that I wanted to talk about. You covered it. I went over what I thought. It's, we have a couple differences of opinion. That's fine. It's not like we're, what's his name? CoffeeZilla and that other guy, Billie Jean or whatever. The way they disagree about things.
Yeah. I mean, that's ugly. No, I really appreciate all the feedback. I do believe that it was a little bit biased because you do have a certain bias towards a trading style that fits your personality best and your goals. Right. And this is why I believe it is by. So a few things, for example, in the very beginning with the PowerX strategies, you took trades the wrong way, right? We talked about this, that you entered before. In the final review, you still included them, even knowing that they were wrong trades. And again, I'm not saying that it was on purpose. It's super difficult to be objective when it comes.
And the reason why I did that was just because I felt like, okay, I consider myself maybe a little bit better than the average student. So I'm feeling like, well, this is what the average student would go through. Right. So that's why I kept those in there.
Quite sure. I didn't have that too often, honestly, as a mistake. I think this was just where you misinterpreted one of the rules. And it's same, you see, if I would take your course, execute it wrongly, and then say, oh, it doesn't work. And you said, follow the rules. That's what you said earlier. If you follow the rules, you will see good results. Yeah. So it would be kind of an an unfair review, I feel, if I took your course, went the opposite direction, because you basically did it when I said it has to go through a price before you can take a trade. You took it before, as long as it was under. So anyhow, small technicalities. So this is where I feel this was probably a little bit biased. Was a bit surprised that you hit some of my comments, that they are no public, only public for me.
Oh no, I didn't hide anything. I never hide comments. You know, I've had problems with YouTube. Okay, related to the deleted comment, I take this very seriously. This is a very serious accusation, and I want to clear this thing up. So I messaged Google, and here's what happened. So I had a question, and here's the video. And I said that Marcus posted something here, and I didn't delete it, so what happened? So you can see here that he needed some time to look at it, give me some time. Then he changed it, instead of looking at all the comments from the top down, he changed it to sort the comments in the newest. And then he said he found it, but he's still looking deeper into the issue. And then he told me what to do. So I went into my YouTube channel, I went into that particular video, and I changed the way the comments were being viewed from top to newest. Okay. And so here I saw one of his comments, but I didn't see the exact one we were looking for. And then as I looked deeper, I found the comment. Okay. So basically, I found the comment, and the comment's back on there. And my question is, why did this happen? Which we figured out why, because I guess it was the way they were sorted. And then I said, can you confirm that I did not erase the comments? And he said, so for the default view, it is set to show top comments. Some comments may not show up, but I tried to refresh the video and it showed the comments we were discussing. The visibility is affected by the comments algorithm applied to YouTube, but to view all comments, you can sort by newest first instead of top. And then the other thing, can you confirm that I did not erase the comments? Yes, the comments were not erased. And then I said, thank you. So now if we go to the video, and I'm signed in incognito so I can check to see if it was there for everyone to see. Here's the video, Rockwell Trading Review. And I rearranged the way the comments can be viewed. And now you can see that he did post this comment earlier, but it disappeared. Okay, and then here's the actual comment that we were talking about, the one in discussion. And here are the replies to the comment. So he said, hey, great video. Is it okay if I post a couple videos in which I share the results of my trading using the software during the same time period? And then he showed some videos here. And I said, yes, no problem. And something about, I think you did some earnings trades on the wheel and used some other criteria. We should discuss this. And he said, yes, I'd be happy to. All the trades that took were from PowerX Optimizer, wheel scanner following the rules. And I said, oh, it looks like you like to trade mostly wheel options in the gold color or the higher risk options. So there's nothing there that I would want to hide anyways. So I just needed to address that issue, because I do not delete comments unless they're from somebody that's fake and has some type of agenda. They're portraying themselves as someone that's not really them. I'll erase that. But anything that's real, I don't erase it. So I just needed to get that out here. I'll see a comment up in the thing and I want to go to a respondent and it's not there. And I don't know what's going on.
Huh.
I have no idea like how that, if your comments are not there, I have no idea how that happened. Like I never got rid of any of your comments or anybody's. I've gotten rid of a few people's comments because they weren't who they said they were.
No,
but I have not gotten rid of any of your comments or anybody's comments. And it's frustrating to see that.
So I don't know, just if it is helpful. It was on part 3 of 6, right? Do you see my screen? So part 3 of 6. See, there's my comment, and then there's First Last and Goomer and Kartik. So for me, the comment is visible because I'm logged in. And as soon as I'm logging in using an incognito window, so same part 3 of 6.
Part
and
3, let me look that up.
There's Kumar, there's Kartik. And if you scroll all the way down, you see that this comment is not there at all. And it is right here, and you actually reply to it.
Part 3.
Anyhow.
So it should be the first comment on there?
No, it's showing it the first comment because it's showing it when I'm logged in as me, right? Okay. But it's definitely one of the comments.
Let me look for it. I don't see it. No, you're right. It's not there. Why don't you repost it? I have no idea why that's not there. Oh, you know what? Sometimes when you put links in there, it gets filtered out. Let me look at that. Maybe it got filtered out because you know what I mean? Like you've seen that happen before, right? Let's see.
Anyhow.
Comments held for review. It might be in here.
It could
I don't see it in here because I go through this every once in a while too. Look at all these things. Yeah. It's not in here as far as comments held for review. And there's no way I'm going to, all of your comments were awesome. I wouldn't take out any of them. I really enjoyed your comments because we were, we have a difference of opinion and that's okay.
Yeah. But as I said, we're doing it professionally.
Yeah. Put that back in there. Paste and copy.
Right. I tried to post it with both profiles, my personal one and the business profile. They're both posted. Anyhow.
Maybe take that link out of there. Maybe it just automatically filters it out of there. I don't know. I didn't. That's frustrating for me because I see it happen. I tried, like just earlier today, I was trying to respond to a comment. When I go to the comment, I can see it up in the little right-hand column, but then when I try to go to it, it's not there. I'm just like, this guy thinks I'm not going to respond to him. And I'm like, there's nothing I can do.
Yeah, I hear you.
So that's very frustrating for me too.
All right, Karl. Well, this was great. I think, I don't know. How long did we spend? An hour and a half at least, probably?
Yeah, it's been about an hour and a half. So, the main thing about me, if there's little things you didn't like about my review on your PowerX, I understand that. And the main thing that I hope is that you use the PowerX and you show your P&L, and then that would be, obviously if you can make it work, then, my
as soon as the market conditions are right, I will.
Yeah, then obviously that's going to outweigh my review. I mean, I have no problem with that. I just do my best and come out with what I come out with.
I understand. All right, Karl. Great chatting with you. So you enjoy your lunch. For me, it's already 2:00. So
yep,
we have an afternoon coffee.
All right. Okay, Marcus. Well, it's good talking with you, and I'm sure we'll talk again. I don't know if we'll do a video again, but we'll talk again. We'll see how things are going. All right. Appreciate it.
Talk soon.
Talk to you.